It's 5 o'clock in London, it's midday in New York, midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good morning, good afternoon, and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID live stream, series 33, episode number 2. That is in the aggregate. Episode number 194 starts here. The Australian Stock Exchange looks more hapless than the English cricket team, notes the Australian Financial Review after the latest ASX disaster, a perfect reaction to Australian institutional failure. Over at the CME, things aren't much better with their outage. CME struggling to own their data centre failure after a sale-leaseback catastrophe, with answers still not forthcoming on a disastrous market shutdown. Is the dream over for the Dream Exchange? Of course, we had Joe Sekela, the boss of the Dream Exchange, as our guest a few months ago. The SEC of the USA have refused their regulatory application after the Wall Street Journal raised questions about funding that was not disclosed previously. And I also have to say, live as we're going through this show, just an hour ago, we had an incredible oration. It will be the headline news story tomorrow in Exchange Invest. Catch that at exchangeinvest.com. Chairman Paul Atkins of the SEC giving us a fantastic manifesto for markets, deregulation, more sensible, coherent trusting of the markets, trusting of the issuers et al. Fabulous news all round. In deals, DB1 and Allfunds merger discussions ongoing, with Deutsche Börse looking to buy Allfunds platform Euronext, previously considered acquiring in 2023. Our guest today, ladies and gentlemen, is Mehmet Memo Belgin. The discussion is all about the human factor, a trading journey. Mehmet Memo Belgin, PhD, is a supercomputing expert with a background in naval architecture and engineering. He completed his PhD at Virginia Tech, where he served as a consultant for SystemX, the world's third fastest supercomputer at the time. Mehmet spent 12 years at Georgia Tech, where he was assistant center director of the university's supercomputer center. He then joined Next Silicon as the director of applications, a deep tech software company developing novel hardware as well as software architectures. He is currently at Moffitt Cancer Center, facilitating cutting-edge AI research to help fight cancer. Mehmet began his trading journey 6 years ago with Forex on intraday charts, where he developed open-source simulators for indicators-based research. While the experience was valuable, the results were mixed. He later transitioned to trading the stock market on daily charts, finding it far more practical and consistently profitable. Reading books by two-time US investing champion Mark Minervini was a turning point, and Memo later trained directly under Minervini to deepen his understanding. Balancing demanding full-time roles, Mehmet developed a trading approach centered on end-of-day analysis and pre-planned orders, avoiding impulsive intraday decisions. Memo is known for his detailed weekly market analyses shared with fellow Minervini traders. Mehmet remains a lifelong student of the markets, continuously refining his trading skills, methods, tools, and mindset. Well, from one student of markets to another, welcome to the show, Memo. Where in the world are you today?
Thank you, Patrick. It's an honor to be on your show. Thanks for having me. I am joining from Atlanta, Georgia. And I haven't moved since my Georgia Tech days. I have already held, a couple of, remote jobs since then.
So excellent. So you're in the headquarters, as it were, Atlanta, Georgia, of the Intercontinental Exchange Group. So a great organization to be close to as in an American financial center. Quite fascinating altogether, and great to hear from you today. So tell me, talk to me. I mean, how did you, what motivated you to get into technology in the first place and this fascinating nexus of engineering and supercomputing?
So you gave a really good, summary of my background. I don't want to extend that one, but it's a very good question, because back then when I finished college, I did not know anything about computers. I was just, focusing on designing, building ships. But after in my career, I needed computers, just like many other professions, perhaps. And I just did not need any computer. I needed supercomputers because the simulations that I was working on required these large-scale computations. It was mostly a numerical wave tank that would replace your experimental, just conventional wave tanks. That's how I got into the world of supercomputing. But the thing is that after that, I never looked back. I fell in love with this. It's a lot of power. It's a lot of fun. So I just decided to, steer my career into supercomputing and computers more and more. rather than engineering. And that, of course, changed my life after I came to the US like more than 20 years ago at Virginia Tech, which was a perfect time and place because they were building the third supercomputer in the world. Like, how cool is that? I just landed right in front of that, in the middle of that project. And I was involved with that project for my, entire PhD program. So yeah, that was the first step.
Fantastic. And so tell me, Memo, you were not born in the USA, were you?
No, I'm originally from Turkey. Fun fact there, my hometown is Troy, with the horse and everything. It's in Turkey. But I grew up in Istanbul for my education and my family. So it was like partial spending summertime in Troy, which is known as Çanakkale, and like most of my time in Istanbul.
Fantastic altogether. Pulsating city, Istanbul. And certainly I've never been to Troy. Must try and make it one of these days. Certainly got a great deal of history around it. So, I mean, it's an interesting journey. How did you get into the world of investment? What motivated you to jump from supercomputing, shipbuilding engineering, supercomputing, and then suddenly deciding one day, I want to be and understand properly the art of investment?
Yeah, it's a great question. And I would like to put some context around it, since that we are focusing on the human factor. This is my human story. My father was a banker. He knew probably anything and everything that needs to know about finance and money markets and things like that. But for some reason, he never passed on that information to us. And even talking about money was a taboo in our household. And I grew up like that. And I always heard from my parents, hey, you have to be a really good student so you can find good jobs. Then after finding good jobs, you have to work a lot, hard to find better jobs and have competitive salaries. And that should be enough for life. And that's exactly what I did. I was a good student. But then I found really good jobs. I'm very grateful. Then competitive salaries. And yeah, that's, but around 7 years ago, I looked at my retirement account and I had a realization. There are some projections and things like that. And I said, hey, something is not right here. Like, if it goes on like that, I won't be able to sustain my, quality of life, lifestyle after my retirement. This is not enough. And the company was managing my accounts horribly. And I just, the awareness of it was, a shocking experience. Like, market was going up, my retirement account was not. So I immediately, almost as a knee-jerk reaction, I felt the need to do something about it. And back then, my motivation was only that. Like, I need to find a band-aid, a shortcut to make money. And that's how I got interested in markets. But like today, trading is a passion for me. It's not about money anymore. But back then, that was my initial motivation. So that's how I got into, reading, learning a lot. So I'll just quickly summarize like what happened later. I found this bundled class, stock market trading and also forex trading together, and I just finished it. I thought that's all I needed to trade profitably. Couldn't be farther from the truth, of course. Then I picked forex because I had a demanding day job, and forex is always alive. It's all there's it can be New York, Sydney, doesn't matter, London, but there's always action in that market. And I also picked 15-minute candles because they are fast. So in my mind back then, market was almost like an ATM machine. I would just step in, go, take my money, and get out. Things, of course, did not work that well, but I'm still glad that I got developed that interest, which made me who I am today after a lot of years since then.
Cool. And so you started in Forex. When did you make the move? How many months or years had you been trading when you decided you were going to start looking at equities more seriously?
Yeah. So that has a story behind it, because after initial failures, and I never lost money, luckily, because I am into my safeties guarantees. I never trade with my money until I prove to myself that I can be profitable. But it wasn't going anywhere. Yeah, I was not losing money, but I was also losing time, which is more valuable than money. So I started looking for other options. There must be a better way to do this. And I found this YouTube series and or blog series called No Nonsense Forex. Um, that guy knows what he's doing. He has some structure and he shares it. And he's a, he has demonstrated success as a prop trader. And his focus is on using indicators. You put those indicators on your charts. They give you the signal to buy, you buy. They give you the signal to sell, you sell. And that appealed a lot to me because it also took the psychology out of the trading, like you're trading with clear signals. But then I started looking into those indicators. What the block series did not give you was the indicators, was the entire system. Like it was up to you to find those, which makes a lot of sense, which is fair because everyone has different approaches. And I combined that with my coding skills, and I developed this simulator, Forex simulator, which is in parallel. So you can actually throw it 1,000, 2,000, 3,000 indicators, and it would backtest everything under broker conditions, live environments, so almost, because I'm using the same platform as an engine that's used for live trading, for backtesting. And it was relatively successful. I found those great indicators. It was working well. But what was missing there is that market changes character, and static indicators, they don't capture that dynamic change. So you constantly need to update those indicators, go through that back testing, forward testing period again and again to keep on track. So I reached out one of the mathematicians working for the platform, and I told him, hey, I took your platform, turned into this great Forex simulator. What can we do together? Let's collaborate. And I read some of his papers before. It made a lot of sense to me. And he gave me one of the best advices in the world that I received in one sentence that, hey, Memo, the edge that you're looking for is not in Forex, it's not in indicators, there's more edge in the stock market. That's what I'm trying to do these days as well. And he was also making the change, and he just pulled me to the stock trading side. I'm glad he did, because he was right. So that's where I started, dropping Forex aside, putting it aside. But I released the simulator under open source, under MIT license, so everyone can download it, do whatever they want with it with no restrictions. If you go to GitHub and search for HPFX, high performance Forex, you can just see the simulator, all of the information and everything else.
Fascinating altogether. Maybe we can get a link up for that before the end of the show so that we can share it with everybody. So you're saying that's in GitHub, and it can be found where, Memo?
I can drop the link on the chat box.
Perfect. Well,
HPFX. If you search for that under GitHub, you can see that.
HP, High Performance FX on GitHub.
Yes.
Okay, we'll put that in as a link. That's really, really helpful. Thank you very much. So you moved over to the stock market. What did you find then? I mean, did you instantly move from the very short-term trading to longer term, or did you gradually work your way up to longer term trading?
At some point, I was pretty much aware that I have better success, better betting average, and better results with daily bars, daily charts. Intraday did not really work for me because of all the volatility, and it helped me to slow down a little, take a step back, look at the big picture. That was the recommendation from the traders that I follow and get the training from. And Mark, you mentioned Mark Minervini, like he also trades the daily charts. And that also gave me an opportunity, because with my very demanding day jobs, I don't have the luxury to sit in front of the monitor and just to be reactive, interactive with the market. And trading with daily bars gave me the opportunity to plan in advance, know exactly what to do the next day. I even, place orders and don't touch anything during the day. If they trigger, they trigger. If they don't, they don't. That's totally fine. And maybe in something, significant is happening, markets are, moving, to the downside fast. Sometimes I just step in and just take my precautions, raise my stop losses, things like that. But other than that, I like that because it gives me a plan. it makes me intentional, and I don't, feel the obligation to, impulsively buy and sell things just to react to the market.
Fabulous. And we're here today, ladies and gentlemen, discussing here on IPO-VID, the human factor trading journey with Dr. Mehmet, Memo Belgin. Thank you very, very much. We've already got some lovely love has been sent to us today. Really appreciate that. It helps the AI bots know that this is fabulous content to help other traders and investors understand what they're doing. So do please consider sending us a little bit of a heart or love during the course of the show. You'll be very welcome. If you've got a question for Memo, by all means, ask it, ladies and gentlemen, wherever you're watching today, whether it is on Facebook, LinkedIn, or YouTube. So here we are, Memo. You are in many ways a trader who's been facilitated. I mean, you exist because of the capital market revolution, my tome from 1999. Tell us a little bit, though. I mean, do you think eventually you can just become too technical when you're being a trader?
Yeah, that's exactly what you said. I am the product of that revolution that you masterfully, wrote 25 years ago. It's a fantastic book, and it gave everyone access. I think anyone can do trading today with free tools, even. Yeah, to be better, you have to put a lot of effort, but I think that's democratized now. You don't have to be on the floor in New York, anything like that anymore. So, and that comes with technology. And as a, person who, lives with technology, who creates it, I thought I had an edge. And in some cases, it helped me. But there's also the tech trap that I want to talk about now. Like when it comes to trading, there may be simple rules for trading. It's not too complicated to, learn about trading, but execution takes, needs precision. That's the most important part. The psychology of it, the discipline of it, doing what you think that you need to be doing. That gap in people's mind is the most difficult gap to get over. So since I started having a lot of ideas, I felt the obligation to implement them all, and I lost a lot of time just coding, looking at the methodologies, algorithms, while what I was supposed to be doing is looking at the market itself and learn from it directly. So I tried to, overcode this and lost a lot of time. That's one of the regrets that I have, although I still see some benefits of, technology in my own trading these days. I found a good balance these days.
Very interesting. So explain to us, I mean, obviously the Holy Grail works differently for everybody else, and everybody has an attitude towards what time segments and how they work. What are your sort of positions in terms of how long you're generally looking to invest for, trade for, etc., in your positions?
Mm-hmm. I'm a swing trader, especially in today's markets. You don't have those long moves anymore. Maybe they will come back in the future. So what I try to do is to get in with small risk and just get out in like 2 or 3 hours, get the profit and just move out. And I usually like selling into strength while the stock is still up, is showing signs of strength. I just sell, put the money in the bank, and just continue to find other trades and just compound this over time instead of holding trades for a long time. Like my average is, I think, like 1 week to 2 weeks. In some cases, I hold them like for 3 weeks if they are really good, stocks. I have some, exit criteria that I follow Minervini's mostly exit criteria, and if I see those happening, I take my profits off and move on to other stocks.
Fascinating. And so how do you manage to do this? You mean literally you have all of these entries and exits all automated or contingent as they go in?
Yeah, one of the challenges that of it is, what happens when you find 10 different stocks? They're all ready to go. They're all well set up. Well, I had to develop a system to pick one, and I think it doesn't really matter because you can sometimes at some point you don't have all the control on this market. You cannot really tell. You cannot see the future about like what stocks are going to go up. But I pick a couple of them. I don't go over. I never take more risk than 10% of my entire capital, and even that is very rare for me. I always, I am very risk focused, and I get into those trades with small risks. Then if they're setting up, I add more. And this is something that I'm teaching myself to do better and better these days. So, and I just drop those orders the day before in the market open. If they trigger like more stocks than that exceeds my risk threshold, I start cutting off some of those. I close some of them, but that's pretty much what I do. But that's a rare thing as well. Most of the time, I only have one or two stocks to go, and I always, my risk, my equity curve tells me what to do the day after. And I put some stop losses. I still use stop losses. I know most, pro traders don't use it, but I have literal hard-coded, stop losses. If the price gets down there, I'm out, and I'm happy to be out most of the time. So I just put those orders, and everything's hands off after that.
Excellent. And roughly, I mean, how often do you find that you are actually doing a trade?
It depends on the market. These days, I'm sitting on my hands. Yes, the market is moving really, strongly, really fast, but it is most like we went through a correction now. It's like a V-shaped recovery. I'm gonna wait for the market to find a base, digest those gains a little, create those, good setups that I'm looking for. And I usually go with Mark Minarini's volatility contraction patterns, VCPs, which requires the price to contract a little, get narrow and narrow before it makes another breakout. So I don't see those happening in the market these days, and I don't see a lot of breadth. I'm no longer looking for a lot of breadth. I'm focusing on leaders more and more, like focusing on which stocks are going up already. And I found another edge there. But that's why these days I had only one trade today, which got stopped out. So, but in better times, sometimes I have like 8 to 10 trades, and some of them are de-risked already. After a stock makes some move, I raise my stop loss to break even, or even some profit levels to finance that trade, and also other trades I can take more risk than. Because and I developed a dashboard which shows me exactly in real time how much of a risk I'm taking, including the open trades. So I can easily look at that and say, hey, yeah, I decide to take only 3%, 5%. I look at the stocks, and depending on the position sizes I have in mind, I can just come up with new stocks or not. But it's almost like filling a bucket with water. If it's full, then hands off. If it's empty, things are working, then I add a little more water there.
Okay, and so tell us, I mean, the content you're using, what do you actually trade? US stocks, what geography is it? If it's not US, and indeed, what sort of size of companies or what sectors do you tend to look at?
Sure. Mostly US stocks, ETFs in some cases. And I don't look at, I monitor China because I'm trying to find some, similarities, and I'm trying to learn more about the stories that it tells me. But I uh, predominantly trade US stocks. And when it comes to groups, I don't make a lot of distinction. Like, I don't stick to certain groups at all. And in my dashboard, I also developed a system to show me which groups are working. So if the stock that I'm already looking at is a part of that group, I'm okay with that. And if not, I look at the other parameters. But I am more inclined these days to go with liquid stocks. And this was a realization in my journey. In the past, I always wanted to be in front of everyone. I have the coding skills, I have the analysis. I could analyze, thousands of stocks at a time using some codes I wrote. So I said, like, I'm going to find that stock that no one knows about it. But the market is not about that. The market doesn't care if that that stock is a great company with great fundamentals, earnings, sales, net profits, everything's off the charts. It's perfect. The setting up technicals, technicals are showing like lots of good signals. But those, we have seen a lot of times that those stocks can crash and burn for no reason at all. And that was kind of making me worry, like, I'm doing everything that can be done. How can I not find those stocks? Then I noticed, and I was taught by Minarini and others, that what moves the market is the institutional sponsorship. So the stocks, they don't, without any volume, those tiny stocks that are not under institutional radars, they don't move much. So I just changed my approach. Instead of trying to be that big fish, that shark in the ocean and lead the way, I just decided to be a parasite, and I started, identifying those sharks, just latch on those, suck their blood a little, and compound my money and just leave. That approach started working much better for me. So these days I'm focusing on, uh, you know, more than $15 stocks. I'm not dealing with less than that, and maybe 1 million average volume. So I'm looking for those liquid stocks that don't go up and down in high volatility.
So pretty liquid stocks, not overly high volatility. You're not too sectorally concerned most of the time, but obviously you crunch different numbers. Well, actually, you know what, Memo? Why don't you walk us through a little bit? I mean, how your analysis works, because it seems to me you crunch an incredible amount of data.
Mm-hmm. I'll be happy to, sure. So um, So let's look at I prepared a couple of slides in advance, and this is just to give an idea. And particularly here, I'm trying to appeal to traders who has this in mind, like I have a job, I cannot trade intraday. Like, do I have a chance? And the answer is absolutely yes, and I'm the proof for it. And here's how I approach things. I put a lot of work on weekends, by the way, and this first slide is from my weekly analysis. I decided to, look at everything under the sun, uh, and look at everything that I have hands on and putting them in a report every weekend. And the purpose of that is not because everything matters, everything tells you a story. But when you look at everything, you can see those slight differences. You can see the trends, especially when I, compare it with the last week's report and put them together, which is I always do. I can see those changes in character. So one of the stuff, by the way, it's like 40 pages. It used to take like 4 hours. Now it's like 1 hour because I automated that thing as well. What we are looking on this slide is the participation levels. This is the conventional description of participation, number of stocks about their 50 and 200-day moving averages. And the top left chart is the average of 5 indexes I usually monitor: NYSE, NASDAQ, and S&P, like 400, 500, 600, small, mid, and large caps. These are the averages of their participations. As you can see, breadth is not there today. Uh, in a good market, we usually see more than 80% levels. So when you just look at the numbers and you look at the trend, the linear trend is sloping down. So it is not really a good market for growth stocks. So I monitor that, and there are some attempts to recover back like a couple of months ago, as you can see on the chart, but they fizzled out later. So that tells me about the style that I need to follow. That's why I mentioned that I started looking for stocks that are leading, that are already going up, instead of waiting for a breath. And on the right hand side, you'll see some breakdown between S&P, small, mid, and large caps. And what I'm looking here is there a rotation from large caps to small and mid caps? That's one of the things that I'm looking at. And also I cannot see very clearly, but there are more stocks that are over 200 moving average than the 50s. So this is a typical picture we see when market is correcting. Stocks started going up, sloping up. They're over their 200s, but they have not really met their, exceeded the 50-day moving averages yet. So this is what I see in overall in this participation charts. And if you go to the next chart, I would like to share another interesting thing that I noticed looking at these reports every week. And I have not missed a beat, by the way. For years, I've been working on these reports and just looking at the same thing again and again, they start telling you a story eventually. So what I look here is the standard, up volumes, down volumes for a couple of indexes. This example is for NYSE, and advanced declining issues, new highs, new lows, and new 52-week, like yearly highs and lows. In the beginning, I was looking at these separately. Then I realized something's happening here, which I refer to as steam. And I share these reports internally in a Minervini traders group that we have. It's a really good small group. Everyone has the same mindset. So what I noticed is that you start seeing some stocks with up volumes more than down volumes. A lot of advancing stocks versus declining issues. But you don't always see immediately them translating into price action, new highs or new 52-week highs. But as you can see at the end of the first two charts, that bar is huge. So something happened here. This was 2 weeks ago, I think 21st of November. I cannot see clearly, but it's the Friday action. So in my note, I put this, literally is taken from the report. Most things remained negative except for the Friday action in up-down volumes and advancing declining issues, which have not translated into price action yet. So I was waiting for that almost wave to turn into a tsunami and just hit the shore with strength. And in the next slide, you can see, like, if you look at the bars there, this is the new highs and new lows from past week's report. And as you can see, the tsunamis just hit the shore. Those bars, they used to be like 0.36 or 39. Now they are like 25, 26. So you can see this happening before it happens. By the way, it doesn't mean that it always happens. More often than not, I see those advanced decline issues and volumes not translating into price action, fizzling out. But when this happens, I pay attention. So these are the stuff that there are many other things, like we don't have enough time to go over everything, but these are kind of the things that I capture over the weekend to get better prepared for the next week. So if you switch to the next slide, you can tell how I approach the groups. It is difficult to read. I apologize, but those details are not important because my code just randomizes colors. There's also a yellow line in there somewhere, but I look at the groups, but they are mostly for context. I do not go and find stocks based on the groups. I first find the stocks, then check the group to make sure that they are really in a good group. And I started creating those pie charts showing me the breakdown for each screener that I have. I have this breakdown of stocks. Currently, biotech is just going up, as most of your listeners would already know. But then I wanted to see the historical progress of it. Has that been a new emerging trend, or has that been going on for a while? And it matters. Like after a while, these groups will just cross down. Another group will just show its nose, and that I will start monitoring that group. So that's another thing that I look at this time on daily basis. And in the next slide, you'll see how I just almost like study all of the charts in detail. And truly, every stock writes its own story, and those are different stories for different stocks. And it really pays to know it because you know the character of those stocks by monitoring them for a long time. I have these tags. These are different methods that I use to buy new stocks or entry to new trades. One of them is power plays, high tight flags. Doesn't matter what they are. If you're familiar with the technique, great. If you're not, it's not really important. Then I'm looking at the this is a screenshot from Market Search, which is the platform that I use, and it gives you this fantastic relative strength RS line. It shows where the stock is compared to the rest of the market. If it's doing better than the rest of the market, you have a high RS reading there. And I'm looking like which stocks are making new highs in that RS line, not necessarily the price. Then I have, this unicorn and code 33 situations that Mark Minervini describes. If you are curious, I put the screener definitions in there. You can easily, replicate these scanners if you have access to market search. But what I do is I tag the stock in that timeline so I know where it's coming from. So Palantir was a stock that I traded multiple times last year. It was, it treated me well because it was a PowerPoint at some point that it got into, Minervini platforms radar, but I was following it before that. Then it became a unicorn. It matches that one. Then it started making these high tide flags, and I'm always aware of these stocks in this way. And when you look at my charts, you'll see these tags all over the place. This is pretty much what I'm spending most of my time on. So let's look at the next slide, which shows my daily routine. Every day after the market closes, I pick my little one from school on my own time in a relaxed environment. I just sit down and do my analysis. I run like up to 13 different screens that I developed. I export them as CSV files. It's a lot of names, so I have to narrow that down. And I have a post process to identify the stocks, only the stocks that are not on my radar. So that gives me a really good focus. So I can only focus on what I don't know about. So I go and manually tag them, just like the stock that you saw in the previous slide. And I unify this list and go over those stocks and add the interesting ones to my watch list. Then I go over my watch list and identify 20 or so stocks that are about to set up or already setting up. And from those, I pick maybe 3 to 8 stocks. In most cases, it's just 3 to as candidates to buy the next day. And this is important. It helps me a lot. I have a report. I take the screenshots of daily, weekly, and monthly charts with fundamental data on it for each viable stock. And I run through a meticulous analysis for each of them. Now that I decided to buy them, I need to record each and everything. This doesn't help a lot with my buying decision because I already made the decision, right? But this gives me a time machine. In the future, if I look at a stock and say, what the hell I was thinking, why did I get into this stock? I can go back in time, find this report, find my analysis, and I can say, oh, this was the reason. And I can tell that because in the comment section, I put my own, thoughts about the stock, my reasons to enter. So this also slows me down. Instead of just buying stocks that look good to me, I take my time to do this analysis. And here and then, you can see some of the points, some red flags that will change my mind. And it's a good thing because I'm trying to trade less these days and focus on what really moves, what really, is strong rather than just acting on every little idea that I have. So, and what kind of an analysis? Glad you asked. It's in the next slide. It's not going to be readable, but I look at everything. Again, price, volume action, like divergences, patterns, contractions, IPO-VID, short interest rate, ownership, management ownership, sponsorship, and this is not a bad thing to do because it only takes 7 minutes per stock for me because I just streamlined everything. I turned everything into like drop down menu so I can just pick things. But again, like all of these are not too important for me. But this started working in a way that I learned a lot about my own trading, which is the best teacher I can ever have. And one of the things that I noticed, for example, I was always recording management ownership. But these days, I'm realizing, going back and analyzing, post-processing my previous results, I'm seeing stocks with higher management ownership seems to be doing well for me, better for me. Same thing for short interest. So I'm even recording things that I'm not looking at today, but in the future, I can just go back and analyze. So that's pretty much what I'm doing. And at this point, I just put the orders, stop limit order, and stop for the stop loss, and get ready, stock ready for the next day. And the next day, I don't even, turn on my monitor, turn on, look at my charts. Things happen, I get email notifications and just enjoy.
Thank you so much, Memo. That's quite incredible. A great overview of what you're doing. And we're going to give you a rest in just a second. But actually, we already have a couple of excellent questions have come in from Justin Fanning. So Justin's first question is, if it's averaged over the past 5 years, what would you say is your average yearly return on investment? And do you have a Sharpe ratio?
It is, I don't have that number right at the top of my head, and I don't look at my Sharpe ratio. I usually look at my equity curve, and the average yearly, ROI is, it depends on the market. When I started, I was not that successful. Then I went through a really good period. And now this year, it was a challenging year for all of the traders. So I lost some of my profits. But they are usually like double digits earnings. But unfortunately, very lately, because of the mistakes that I know about, which was a good learning lesson, I had some overexposure, and I'm back to single digits for this year only. But overall, I have been, profitable consistently, and that's what really matters for me. I don't want those short periods that you hit the moon, then all of a sudden you just crash and boom, and you give away everything. I'm trying not to be there. That's why I'm always measuring my maximum drawdowns. But I'm going to give you another metric that's very important for me, and I keep that consistent. It is the maximum. My maximum drawdown has never been more than 10% over the entire equity, and I try to keep that very limited to 5%. If I'm seeing it going below 5%, I start hitting the brakes, because it takes time for the open trades to just set up, find a closure, and that's only enough to stop at 10%. If you hit the brakes at 10%, it's too late with open trades.
Very interesting. So I mean, that's quite a remarkable number, max drawdown of 10%. Justin, I hope that gives you some color to your first question. Thank you very much for asking it. And let me ask a second question on behalf of Justin, Memo. So how many hours a week are you putting into this strategy in total?
Yeah. I'm for the analysis only, not considering the training and learning part. The weekly analysis now takes an hour or so. I draw the code, I hit the button, it just generates 40 pages of charts. It collects everything from different places, internet. It just puts everything in context. All I need to do is just sit down and look at those and put some manual stuff that I cannot automate in there myself, and just do the analysis. In weekdays after the market closes, I don't need more than an hour for the next day analysis and look at where I am. In some cases, when I cannot see where I'm really, and I cannot decide which stocks to buy, it may be like one and a half hour or something like that. But this is pretty much the effort that I'm putting into. And I want to keep it that way, because I don't want to live to trade. I want to trade to live. And I'm enjoying it a lot, but that's not something that I plan to spend my entire day on. I hate watching monitors every time, every day, every second.
Thank you very much, Memo, for that great answer. And Justin, thank you for your questions. If you've got a follow-up, do by all means come back and ask another. We really appreciate your two questions there. I'm going to give Memo a break for just a moment. Justin, that might allow you or any other viewers to both give us a little bit of a like, and also, of course, ask a question if you've got one for Memo. But let's move on, ladies and gentlemen, just to that little break, our hiatus in the middle of the show that we always have, and talk about big world. And this week, our reel, we're looking at the fascinating numbers of population growth trends with an eye on Africa. Meanwhile, in Big World, fun fact talking about African-specific population trends, Nigeria is expected to grow from 238 million people today to 369 people. Zambia is going to add 700,000 citizens per annum, and the population of Mozambique will double from the current 34.6 million. For more in Big World, like or follow. There. Obviously, I was referring there to 369 million. That word seemed to manage somehow or to not manage to emerge on the video. Our book of the week this week, ladies and gentlemen, something which also has a relationship to population pyramids in its own way, shape, or form. That book is Carbon Hunters, Reflections and Forecasts of Climate Markets in the 21st Century by Richard Sander and Paula Di Perna. Unique overview of the launching of carbon markets worldwide by the OG of the carbon markets, Richard Sander, and Paula Di Perna, who was involved in many of the first aspects of it via her position at the Chicago Climate Exchange. It's all about the launching of carbon markets, the evolution of those markets as critical tools to manage climate change and other environmental problems. And indeed, given the unique background of the authors as pioneers in their respective domains, I do believe this book is going to have, well, pretty much no comparable or competitive books in its sector for quite some time, if indeed ever. Don't forget also, ladies and gentlemen, you can catch a fantastic IPO-VID wherever you're watching this show. Just go search for it in the archives. Just a couple of weeks ago, I was in Chicago and I had the wonderful opportunity to interview the man himself, the OG of the carbon markets, the father of financial futures, Professor Dr. Richard Sander, and a cracking show that was altogether. Now back to today's cracking show, and this is indeed our last live guest of the year. From next week, we're going to be starting talking about having our roundup shows of the year that has just passed. Memo Belgin is talking about the human factor, a trading journey. So Memo, I mean, a couple of things. Talking about that human factor, I'm really interested. You've given us all of this analysis, everything that goes on. You mentioned a couple of times being in various trading communities, including those that were specifically related to Minervini, et cetera, et cetera. What's your experience been of those trading communities? And maybe you can compare, contrast with, say, scientific chat rooms or some other aspect of your fascinating portfolio life.
Yeah, that's a fantastic question. And the revolution that you wrote 25 years ago, it gave us access to trading. That's how I can trade today. And it's all great, but it also took away the floor from traders. So the floor traders, they probably had a lot of problems, including a lot of stress. You're on spot, you're just trading in real time, and maybe some body odor because of the other traders around you. It was a crowded place. But the one problem they did not have was loneliness. But in today's world, now that we have access to everything, but we are in front of the computer trading alone. Not saying like traders are not social people, like you can have great social life, but when you're trading, you're alone. And that's not a good thing. That isolation is a really, really bad thing. And the last thing you want to do is to stay in your echo chamber and with your own thoughts, repeating the same mistakes. And that's why I encourage everyone to reach out to chat groups and any platform that, with other traders of the same mindset. And I was very lucky with Minervini because what that platform also provides is people who are in the same mindset. And I met one of my buddies there. His name's Tommy, and I started, chatting with him every week. That was a tremendous change in my life. Like it was one of the most impactful, factors in my trading life, because we openly share ideas, we challenge each other, but for a person like that, you have to trust a lot. With Tommy, I share everything. I make a mistake. First thing I tell him about that mistake and like why I did that and like what I'm trying to do to not repeat that again. And he sees my entire account. He knows exactly what's going on. It's very difficult to find a person that you can trust at that level. But you don't have to do that. But even being a part of the community is great. And what I love about trading community is it's not a single profession. Like you're a doctor, for example, you just hang out with other doctors. Everyone is a doctor. You go there, like everyone is like, even financial world, like everyone is in the finances. But in trading, people come from all different walks of life. We have like teachers, we have dentists, we have like pilots, like everything. We have naval architects, everyone that comes to mind. And that brings a lot of diversity and color. And you all meet at the same level with the same passion of trading. So it just brings it together. And I love that community. That's one of the reasons why I love trading.
Fascinating. So you love that whole element of trading, the great diversity. I mean, I think I always love the great statement by Paul Gallico, the famous novelist. I mean, when he was a famous novelist, he used to still go and report on baseball games for one of the New York papers. And people said, why do you go, Paul? I mean, why do you want to sit there in the bleachers with people kind of emptying bits of hot dog and tomato sauce squeezing all over you and so on? And he said, well, the reason he loved going to the ball games was because all human life was there. And let's face it, if you don't have a market where all human life is, it can't be a properly liquid market. So I totally appreciate what you're saying there, Memo. Let me, however, contrast that with something else. There's a topic that we can't get away from in our life every day at the moment, even if we don't ask ChatGPT about it, and that's AI. How do you interact with AI? Do you find that it helps you in your research and your analysis away from the madding crowd of the chat rooms?
Yeah. It's another amazing question, because I work with AI for my daily work as well, on the cancer research. And I do use AI in my trading as well, but it is different from what most people think. Most people see AI as an oracle. You ask questions that you want to know, and you get answers, like which trades which stocks to trade, what is the direction of the market. But AI cannot see the future. It will fail miserably trying to give you those answers. Instead, I use AI as a mirror. I look at my own self. I load my results from the history, and I pretty much I I mentioned Tommy, and he does this in a great way. He inspired me to do that, and I just tell AI what kind of a trader I want to be, and it shows me with perfect clarity, in a clarity that you will not achieve with another human, because they're sometimes polite, they don't want to hurt your feelings, right? But AI just gives you straight, says, hey, you have been sticking to this method, but your success rate for that one is not that good. At the end, on the other side, you are having really good results with these entries, these types of entries, but you have not really traded that much. So you start gaining this kind of insights. So I think AI matters, different things for big institutions. I know that it's not the future anymore, it's today. Today, everyone is using AI, but it means different thing for individual traders, and everyone can use the tools in the way that helps them. And that's how I'm approaching AI. The last thing I want to do is to ask AI what I should be doing. I use AI to accelerate the analysis and things like I would do otherwise myself anyways. So currently, but in the future it might change. AI is also evolving, so we'll see together where it goes from here.
Fabulous. And we've got a third question from Justin Fanning. Thank you so much, Justin, for your engagement today. I'm going to half blot you out on screen, though, at the same time, Memo, so we'll just see your forehead for a moment. So Justin is asking, would it be fair to say, rather than sticking with an instrument and performing analysis on it, much like FX futures, etc., you reverse this approach, starting with your filters and then look for symbols that match? I believe you touched on earlier individual equities within a group that are lagging an overall index sector move, etc. Fascinating question.
So yeah, that is possible. That is actually what I was trying to do for many years. But again, it is very difficult to, it's all about the future. Everything that you do needs to give you an edge. So it is very difficult to find an edge looking at the previous stuff and look what is matching, because then you would find yourself curve fitting to your past history, and you think, hey, I found this depending on my history. Like when you reverse that cycle, you can just find really good directions. But are those directions really the future? That's the most difficult question to answer. And I don't think anyone with any kind of technology can answer that question. That's why I'm focusing on today. Instead of looking at too much on my past or trying to predict the future, I just be aware of today, what's going on, and I react to that. And the more I learn how to react to today and this instance, the better trader I will become.
Fascinating. Fascinating altogether. So tell us, I mean, what do you think, just looking forward, is going to be the developments that you're likely to see in your approach? Or do you think you're going to be able to maintain effectively the analyses that you have for a reasonable period of time to come, Memo?
I think I'm going to continue to evolve. I will remain a student of the market forever. And I have some ambitious goals I'm not setting those goals because I'm ambitious, but I need to set them to be better. They are a higher stake for me. Eventually, I would like to join the U.S. investment championship, and for that, I'll continue to look for leaders more, trying to better take advantage of what's already happening instead of trying to find things that are that may happen. That's going to be a big change in my life. I still have some gaps there. For example, I don't know how to trade the gap ups, and most of the time when you're an earning, I know that the pro traders can masterfully trade them. I have to learn more about those. I have to also develop my discipline and psychology better to take more risks, and I'm very timid. I, if I just did a post analysis, like if I just took full trades, I would be in a totally different place, in a much better place, but I'm still learning, so I'm giving myself that time and breathing space.
Wow. Well, I mean, at that point in time, I've got to say we're going to give you some breathing space because I think it's time for the last question, Memo. So therefore, as we always conclude this show, and you're going to be the last person to answer this year as our last live guest, Memo Belgin, tell me, where do you think the capital market revolution goes next?
I think the question, like assuming that AI is not the future, I would say AI, but I think it's today. It is going to quantum. And if your listeners have not listened to your previous episode, was it the previous one or one of the recent ones with Hayden on their post? Fascinating session, and it was great to get his insights about the future of our quantum future in general, and also what it will change for the finance. There are a couple of stuff there that was a little alarming for me, like trading is not going to be the same. Quantum is going to change everything, and he makes a lot of sense. Like I know Monte Carlo simulations from many other stuff, and you have to do them one by one or in parallel, but quantum will just all of a sudden do this. But I think it will change the trading tremendously for institutions. But again, I decided not to be a shark. I'm a parasite now, and I'll continue to look for ways on jumping on whatever is moving for whatever reason. So I'm not going to compete with institutions with quantum powers in their hands. But I think there will be a place for individual traders like me in that future as well.
Wow. Well, there you go. On that note, there's still a room for the individual traders going forward. I would tend to echo that great point as well. I think it was show number 187 or somewhere thereabouts was Hayden van der Post talking about AI. We've got a load of other great questions and shows that have been going on in between. Thank you very, very much, Dr. Mehmet Belgin. Memo, it's been a joy chatting with you. Just as I have to say, it was also a great joy for PhD, Positivity Hack Delivered, our other show, which is all about for women on IT and others, to talk to your wonderful wife, part of your great power couple there in Atlanta, Georgia. I hope you'll pass on our best wishes to Dr. Ebru Kapazulu. It was a joy to see her on that show. I know we did the prep call a while back, and that was how we first came to know of your fascinating investment background. You should speak to my husband, she said. Ladies and gentlemen, that has been our show today with Dr. Mehmet Belgin. We've been talking about the human factor in a trading journey. Next week, it's the first of our two-parter year in review. We'll be looking at various pieces of commentary and also, of course, how people have reacted to discussing where the capital market revolution goes next. My name is Patrick L. Young. It only remains for me to say thank you very, very much, not just to our guest Memo today, but also to Justin Fanning for his fabulous trio of questions. Thank you to the production team, AJ, Desiree, and Herminia. Lovely to have all of you ladies back on the gantry once again this week. And it just remains for me to say, well, join us in Exchange Invest at exchangeinvest.com if you want to keep up to date with what's going on in the world of bourses and market structure every day for the exchange of information. And of course, if you're looking for a market or a marketplace to be built, then do get in touch, because that's the thing we do by day. Ladies and gentlemen, we'll see you same place next week, same time. Thank you very much once again, Memo, and I wish you all, ladies and gentlemen, a great week in life and markets.